Good morning, everyone. My name is Amber Gunst, and I'm the CEO of Austin Technology Council. We're very pleased today to bring this program to you with VCFO, again, on the Paycheck Protection Program. We know a lot of our local businesses have been taking advantage of this very important program to keep themselves moving and keep their businesses moving as well. So very grateful to VCFO to take part in this. We are going to be using Slido for questions today. So please use the Slido code 62047. Again, that is 62047. And we will go ahead and pull questions off from Slido and get that information to you. And as a lot of the questions, because the PPP and all of the SBA loans are moving so quickly, may not be able to be answered today as the VCFO team is still collecting information on that, but we will be putting together an FAQ on all of the questions as soon as we get the information over there. But now I'm going to pass this over to Jennifer Lennarz with VCFO. Thank you, Jennifer.
Hi, everyone. Thank you, Amber. And thank you, everyone, for joining us today as we have our second in the series on the PPP loan. As Amber said, my name is Jennifer Lennarz. I'm a consulting CFO with VCFO. With me today, I have Regina Walters, also a consulting CFO, and Darrell Tesmer, our COO and EVP. Just a little quick CFO for those of you that don't know us. We are a professional services firm that provides an integrated suite of finance, HR, recruiting solutions, improve performance, and optimize productivity. Our mission is always to make companies stronger. Just a little bit on my background real quick. I've been in the finance community here in Austin for almost 30 years now. I worked with two of the big four firms before going into the tech industry. In the tech industry, I've been a controller as well as CFO for 3 different tech startups here in Austin. And I'll let Regina tell you a little bit about herself, and then Darrell a little bit about himself.
Thanks, Jennifer. Hi, everyone. I'm Regina Walters. I've been in the accounting and finance industry for the past 20 years in Austin, and since the PPP loan out, I've been deep in doing research with Darrell on researching all the questions and everything there is to know about the PPP loan. Thank you.
Hi, everyone. I'm Darrell Tesmer. I'm the Compliance Officer for VCFO. Interestingly, I've worked for the company since we started, so since 1996. I serve as, I guess, the administrative officer, probably be the best way to describe my role, but with Regina and Jennifer and all of our team, really, we're kind of frontline with the research and understanding the PPP and other programs that have recently come from the federal government. So very happy to talk to you all today and look forward to your questions.
Thank you, Darrell and Regina. Again, to remind everybody, use Slido, please, for questions. Download it on your phone or use it on a browser. The code, if it asks for one, is 62047. Okay, so now to get into the heart of our presentation and what we're going to be talking about today. And really what we're going to be talking about is maximizing your PPP loan debt forgiveness. We're going through this with a lot of clients at the moment. I think in total, we have helped 39 of our clients get almost $18 million from the PPP program. So our agenda will be, we're going to recap from part 1. We're going to go through some of the new guidance very briefly. The guidance is changing all the time. We're going to discuss what do you need to do to maximize forgiveness. We're going to talk a little bit about documentation and reconciliation and what we think are some of the best practices associated with that. We're going to just quickly talk about some additional considerations as we work our way through these 8-week periods, and we'll finish up with a little Q&A session. As was mentioned, we will do our best to answer questions for people, but please understand this is all an evolving situation. We don't have all the answers. The lender doesn't have all the answers. They doesn't have answers, and we're not even sure that the people that drafted the legislation have all the answers at the moment. So I will say that I think the constant in this whole equation is that there's going to be change. Okay, so first, a quick recap from part one. First off, the start date. Please check your loan documents on the start date. Okay, we have seen different start dates coming from different lenders. Okay, as the guidance says the date that funding occurs. But again, check your loan document because they are the definitive document. And if there's any confusion, talk to your lender. You're going to hear me say that a lot. Okay. Next, open a separate bank account and treat it like a trust account. That's where you should keep the funds from the PPP loan and make disbursements from that account. A quick recap on what to use proceeds for. So payroll costs, remember it is the payroll protection plan. So the primary thing is to protect payroll. Payroll costs include gross pay, paid sick, medical, family leave, state, local employer, payroll taxes, healthcare benefits, retirement costs. There are other qualified costs that you should not use the proceeds for, or that you can use the proceeds for, but will not fall into the 75% maximum forgiveness there. So there's basically two categories. Payroll costs, get forgiven. Other qualified costs, you can only use up to 25% to have forgiveness. These include things such as interest on mortgages and other debt obligations secured by personal property that were incurred before February 15, 2020. Rent under lease agreements before February 15th, 2020, and utilities on service that began before February 15th, 2020. Again, these are all subject to that 25% maximum to get full forgiveness. And we're going to go through this in a little bit. There are some things that are explicitly not allowed. Independent contractors, compensation paid to employees whose principal place of residence is outside of the U.S., cash compensation to anybody who makes more than $100,000 on an annual basis. And so, for an 8-week period, that's $15,835. The employer portion of payroll taxes, FICA and FUTA, mortgage payments, or principal payments. As I had mentioned before, work very closely with your lender because ultimately they're going to sign off on your forgiveness. And monitor the SBA and Treasury websites. They are changing constantly, as we'll see. Okay, so on that topic of Small Business Association and U.S. Treasury, we have seen a lot of changes. We're seeing things come out on an almost daily basis. And I'm just going to touch on some of the bigger ones that we have seen. Additional criteria for seasonal employees. So they have added a new 12-week period for calculation of a loan amount. You can now use the period from May 1st, 2019 to September 15th, 2019. This is to capture the companies where their seasonal employment is during the summer, such as those on the Gulf Coast. The original periods, these people would have not had a high degree of eligibility. The SBA came out with new guidance regarding promissory notes, authorizations, affiliation, and eligibility. Promissory notes and authorizations just have to do with, is it on the lender's paper? Is it on the SBA's paper? What is the exact authorization that comes from to approve the loan. Does it have to be an SBA document or can it be a lender document? And then affiliation and eligibility. That is, you have to look at, it's some clarification about looking at your structure to see if you are an eligible entity. For example, they were very specific, hedge funds and PE firm eligible entities. And you do have to look at affiliation. If you are private equity owned, you may have to take a look at that. We have had a bunch of new FAQs. We've had FAQs 32 through 44 come out now. And as I mentioned, these are coming out almost every other day. A big one on here is that the SBA will review all loans over $2 million, in addition to other loans. So do not think that just because your loan is below $2 million that you are not going to get a review. There is a big push to have loans reviewed. Okay. Another one that there's been a lot of talk about, especially for people that are in service industries, and such as the restaurant industry, is with the additional unemployment money, there are cases where employees have declined offers to return to work. Your PPP loan will not be reduced if an employee declines an offer to rehire. However, you will be required to have documentation. You want a written offer letter. You want a written decline from that employee. Okay, now on to forecasts and strategies. First of all, loan forgiveness calculations remain uncertain. We're still looking for guidance in a lot of areas, and sort of the more we dig into them, the more issues that we can actually come up with, and with very little guidance. So as I mentioned earlier, the only thing we can be certain of is that things are going to change as we go forward. We suggest that move forward with what you know now, but expect change. We highly recommend the 8-week forecast for the period of loan forgiveness. And one thing I want to point out is this 8 weeks, it's 56 days. If your loan period began on a Wednesday, it does not mean it ends on a Wednesday. It might end on a Tuesday. So please be careful of that. Remember, May's a 51-day month. When you're doing your forecast for this 8-week period, we recommend that you do it on a daily basis. We would recommend that you break your expenses into basically 3 categories. Those that are qualified for forgiveness, or part of the 75%. Those are not qualified. Those are the allowable, but the ones that fall into that 25%. And then lastly, your FTE calculations, okay? We would also recommend that you be prepared for multiple time periods. Sometimes we know what the SBA guidance says regarding time periods, that it's loan funding. We're seeing different things on documents. If you have a discrepancy in time periods and you are working that out with your lender, plan for both of them so you're not surprised. It's highly likely you will need more than one forecast. Okay. The more you prepare, the more you forecast, the more you think about your strategy, the better off you're going to be. Once you have a forecast or multiple forecasts, don't keep them to yourself. Share them with your lender. Make sure your lender knows what you're doing and agrees with what you're doing. And then also develop a strategy for what happens after your 8-week period. After the 8-week period, everything is most likely not going to be all rosy. A lot of people are going to see decreased revenue. We're still going to be struggling with a lot of items related to COVID-19. Now is the time to develop a strategy on how we're going to deal with that post 8-week period and the remainder of the year. Documentation and reconciliation. So the first thing that we recommend that you document, and we highly recommend you write a memo on it, is necessity. Remember the statement you signed for the PPP loan. Current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. You confirmed that statement. Document why this is slow. Document working capital. Document expected sources of funding. What do you have access to? What don't you have access to? And remember, it's not just, oh, you have access to something, but it is it going to negatively impact for the business? For example, you have access to private equity. Well, if that equity is dilutive, well, that's a negative impact to the business, okay? So just make sure that you have shown diligence related to necessity. When you're doing your forecast, include all records from day one of the effective period, okay? You are going to have to provide those to the lender. We would highly recommend that you create a list of vendors, including invoice dates and due dates. And again, I would categorize these. Put them into known allowable. Put them into unknown if they're allowable or not. You know, one of the areas of uncertainty is utilities. What falls into a utility expense? You are paying for a video conferencing system. That's the way you're now communicating with your employees. Is that a utility expense? We don't know. We don't know the answers to these things yet. So what we recommend is document them, put them somewhere, look at them, discuss them with your lender. Also, make sure you pay attention to due dates, invoice dates. Work with your vendors. Maybe you short period invoice for, say, if you normally get a monthly invoice, maybe you can get it for 2 weeks, you know, for utilities or something, so that your payment falls within your forgiveness period. Maybe pay some invoices early so that your payment falls within your 8-week period. Again, discuss all these items with your lender. Save all these relevant items into a PPP folder. Create a separate folder on your network. Make copies of the documents so you keep all of the documents in one location. You know, this includes payroll tax filings, payroll summary reports, invoice copies, and proof of payment. Make sure you payment, because from everything we're seeing, this is going to be cash. Create a savings methodology for the documents, because remember, you're going to have to hand all this off to your lender as you go through the forgiveness process. Track allowable expenses and payments over the 8-week period. So you have your forecast. Start tracking your actuals, okay? So start populating with actuals. Keep a running total so you know where you stand. Always keeping in mind you're trying to maximize loan forgiveness. Create reconciliations for items that have both allowable and non-allowable costs. For example, payroll records. If you have employees who annualize salaries over $100,000, if you make one payment for mortgage and interest, the mortgage principal payment's not allowable. The interest payment is allowable. Your payroll records are going to have FICA and FUTA. The employer portion, those are not allowable. Neither are things like payroll processing. So make sure that you leave an audit trail. We really need to think about this as an exercise that is going to be audited to make sure that we keep all the documentation. Next, make sure you're doing your FTE tracking, including changes in wages. Okay, remember there are rateable deductions in forgiveness, ratable reductions in forgiveness for reductions in headcount. Also for decreases in salary, okay? Pay reductions greater than 25% reduces forgiveness. So make sure that you look at FTEs during your base periods. What are they today? How much have they changed? How much have salaries changed? And also, you have until June 30th to correct any of these items. So if you do think you're running into a problem and it looks like you're going to have to turn some of this into a loan, look at what headcount are you going to restore, before that June 30th deadline. What employees are you going to bring back on? And again, once you've done all this, arrange a meeting as soon as possible with your lender, discuss documentation, process, and methodology. Make sure you are both on the same page. Some additional considerations just to keep in mind. Again, I sound like a broken record on this one, but communication with lenders is going to be critical because ultimately you're going to go to the lender for forgiveness and the lender's then going to go to the SBA. So you want to work with the lender. Monitor the SBA and U.S. Treasury publications. If you go to VCFO's website, we have a coronavirus landing page. Go to our website, click on that. We have all the links to all the publications. We're updating them on a daily basis. They're in one concise location. Work with your payroll providers. Can they provide a report that makes your reconciliation easier and helps you do the FTE counts? Work with your vendors. What can your vendors do for you to make it so that you can maximize forgiveness? One thing that we want to point out that we still don't know the answer to, we know what the IRS has said, expenses paid with amounts forgiven are not eligible for tax deductions. This is currently what's coming out of the IRS. We don't think that that's what the legislation is intended. We're hearing a lot of comments from people in the legislative branch of government saying, hey, wait a minute, IRS, that's not what we intended. But to fix this, it might require additional legislation. Over the next couple weeks, make sure you proprietize PPP loan forgiveness, forecasting, documentation, reconciliation with your finance, accounting, and HR staff. This is going to involve everybody, okay? And lastly, I would like to leave everybody with one reminder. So when you signed the documentation applying for your loan, there was a statement that said, the funds will be used to retain workers and maintain payroll or make mortgage interest payments, lease payments, and utility payments as specified under the Payroll Protection Program rule. I understand that if the funds are knowingly used for unauthorized purposes, the federal government may hold me legally liable, such as charges for fraud. This has criminal penalties associated with it. So pay attention. Sorry that was a little longer than I expected, but now I'm going to hand it over to Darrell and Regina and see what questions they've come in for us to answer for you.
Thanks, Jennifer. So there's a couple of questions, and I'm sorry, there's a little bit of echo. Maybe if you could mute while there you go. Thank you. So a couple of questions have come in during the session today. Thank you for those. The first question that I'm reading, sorry, I'm looking at my iPhone for the application. So a question has come in about an earner who is making $50,000 maybe a year and is mostly paid by commissions. And there's a question about how is the 25% applied. So some interesting math. The way that the SBA and the U.S. Treasury has I guess pronounced how the funds can be spent to get loan forgiveness. It's a ratio that they have defined, and they've said at least 75% of the money received that's in the PPP loan needs to be spent on payroll costs. So in the case of a one-person employee that, maybe you have 50,000, technically the entire amount, if that's the only thing you ever spent, subject to other requirements, would be eligible for loan forgiveness. What they're really talking about is that they don't want other costs like rents and interest and payments on the utilities. They don't want those to comprise more than 25% of the total spending. So in this case, it's just a matter of adhering to a 75-25 rule, and then running those two different buckets of money to see kind of what the breakdown looks like. Regina, there's another question behind that. Would you like to respond to about payroll fees?
Yes, thanks, Darrell. So we have another question, and the question is, are payroll fees included in forgiveness? And they are currently not included in the forgiveness portion of your loan. They're actually not included in any type of the loan proceeds. I did want, as I have one more item I just wanted to address and kind of follow up with what Jennifer had said about documentation. The one thing that you guys would want us to go ahead, if your lender didn't ask you for your actual lease documentations when you were applying for your loan, go ahead and get those documentations so you have them ready if the lender wants to verify that your leases were actually in place at the time of loan forgiveness. And one other item about just what Jennifer had said about knowing when your vendor payments are due, like your utilities, and when you're actually going to use them for loan forgiveness. Keep in mind, if you have utilities or even like your health insurances on auto pay, you might want to go in and check to see when that auto pay is ready to withdraw from your bank. Because if you have a window, like for example, your utilities bill was billed on the 1st and it's not due till the 20th, and you usually do your auto pay on the 19th, but your 8-week measurement period is on the 15th, you want to make sure you stop those auto pays just within this 8-week measurement so you can capture those expenses during your actual 8-week measurement period. And I see we have a couple other questions. Let's see. So here's one question. It says, our bank said payroll taxes are not allowed for the inclusion in loan calculation. I hear you saying that FICA is allowable for forgiveness. That FICA is not allowable in your loan forgiveness amount. What is allowable for taxes is your state and local taxes. So when you're calculating your payroll that's forgiven, you have to take out your FICA taxes. Okay. Darrell, I see a question on bonuses. Do you want to take that one?
There we go. Can you hear me now?
Oh, yes.
Yeah. So payroll taxes. So the answer to that question is that no, FICA payment for FICA in your payrolls is not an item that's considered eligible actually spending categories, and it should be excluded.
Well, thank you, everyone from VCFO, so much for answering those questions. We know that there are going to be a lot of questions that come up today, and so we are going to actually keep Slido open for another hour so that if you have further questions, you can go ahead and submit those in there, and we can get them over to the VCFO team to be able to get the answers for those. Again, the code for Slido is 62047. That is 62047, and submit those questions. We will get them over to the VCFO team, and we will get those answers out to you in an FAQ. I'd like to thank VCFO, Jennifer, Darrell, and Regina for being part of this today and helping guide everyone through this very new, always changing legislation, and want to make sure that all of you are being safe and healthy. make sure you're wearing your face masks when you leave your homes, and also make sure you are washing your hands. And if you have the ability to continue working at home and keep your employees continuing working at home, please do so during this time, as we are seeing increased numbers in positive testing and would like to see that decline much more before we all go back and are able to get together very soon. If you have any questions for the VCFO team and you'd like to contact them, please feel free to reach out to our team at Austin Technology Council. You can email us at info@austintechnologycouncil.org. Again, that is info@austintechnologycouncil.org, and we can get you in touch with the team at VCFO. I hope you all have a wonderful weekend, and we look forward to seeing you next week, where hopefully we will have even more answers on Paycheck Protection Program. Thank you.